As expected, the Federal Reserve announced another cut in interest rates last hour. For reaction, let's bring in local financial pro Steve Ringo on the KRLD News line. And Steve, no big surprises today from the Fed.
Yeah, exactly. We saw the Federal Reserve reduce interest rates by 25 basis points, which is a quarter of a point. So this is the second time in 2 months. And the whole idea of a rate cut is in order to, help stimulate the economy by making it cheaper for people to borrow money. Many people believe that this rate cut shows that the Fed is cutting rates now to stay ahead of several economic risks that are stemming from our global and economic slowdown. We've also got the U.S.-China trade and also some uncertainties about the future for the U.S. economy.
Was there some debate this time over whether the cut should have been more substantial?
Yeah, definitely the Federal Reserve is getting a lot of pressure from the administration to cut rates a little more aggressively. But they have indicated that there will be more future rate cuts ahead of us.
How, Steve, can we as consumers use this to our advantage? What are some of the big ways we can do that?
Right. So the first thing is anytime there's a rate cut, it's going to be good news for borrowers, but not good news for savers, right? Because borrowers, the interest rates on our credit cards and our mortgages have the ability to go down. But for our savers, the money that we have in savings and fixed income instruments will go down as well. So it's hard to make money for people that are in retirement when interest rates are getting closer to zero.
Does it affect credit cards at all?
It definitely does. Credit card interest rates are at a record high now. So if you're a credit card holder and you've got a variable interest rate, you could see that rate drop, which is definitely a good thing. You'll see that in the next couple of billing cycles. So it definitely has an effect on credit cards.
And if you ask most people what the interest rate is on their most used credit card, is it correct that they probably would have no idea?
It is, and it's astonishing how high those numbers are. You take a look at, if you go and invest money at a CD at a bank and they're paying you very minimal, but on the other hand, you take a look at the interest that's being charged on your credit card, there's some of them that are up to 26, 27%.
It's worth checking. That's Steve Ringo from DeWitt Dunn Financial Services.